As indicated earlier, the current inflation data is in line with market expectations, with analysts having forecast an increase. Chief economist at PwC, Lullu Krugel, speaks to us in reaction. Thank you so much for your time, Lullu. I think let's start with where the risk factors are, where the big concerns, particularly when we see that food prices, in reference to meat in particular, are the drivers to the current level of consumer price inflation.
Yeah, Tumisang, as you mentioned, food and fuel transport costs being the big drivers. And the truth is that those are the big items that the majority of South Africans spend a fair amount of their money on. If you look at lower income households, just the food component of that is about 50% of the inflation basket. So it hurts. As you say, though, the 3.5% not entirely unexpected. From what I understand, the beef price increases were particularly driven by, some illnesses, etc., that has been reported amongst cattle. So hopefully that would be a short-term event as well, and we would see beef prices returning to more moderate levels over time. But as you just had in the insert before we started with the conversation, the reality is that there are a lot of basic food items, fruit, veggies, etc., that have experienced increases that are slightly shocking, I think, for most South Africans, and that is the challenge that we are sitting with, although overall inflation seemed to still be well in check.
On that note, Lullu, what's the near-term outlook where consumer price inflation is concerned into the remainder of 2025?
So most economists, as you've indicated, did expect this uptick that we are seeing now. It's not coming as a surprise. The Reserve Bank also foresaw that in their inflation outlook. And we are actually expecting inflation to edge higher, probably towards 4% towards the end of the year. But then it should start to moderate back to or closer to the 3% range now, or target. So the fact that we need to deal with is that the Reserve Bank would probably not cut interest rates any further from their latest decision, and we kind of expect that that would be their stance, specifically given that they want inflation to return to that 3% marker before making any further decisions.
I'm glad that you raised that particular point, and I'd like to pick your brain around the inflation targeting debate that is ongoing. Yes, the Reserve Bank governor touched on it in the previous outcomes of the Monetary Policy Committee, but with the CPI now having inched up to 3.5%, how would a lower target range then be assisting for South Africa?
So what the Reserve Bank will be looking for when they make decisions about the inflation going forward, or the Monetary Policy Committee rather, if we get to a point where we agree on that 3%, is that inflation gets as close as possible to that specific number. And what the current numbers mean, and the expectation that we think that inflation will probably tick higher, given that this is a decision that the Reserve Bank is kind of now made, it seems from the conversations in the market, I don't expect that they will increase rates, that we're suddenly now in a situation where it's a question of inflation is now over 3%, so we're going to start increasing rates. I don't think that that would be a rapid decision. I don't know how many people can remember, but when we started with inflation targeting in the early 2000s, and we started targeting the range of 3 to 6%, we also didn't immediately, get or fell with or had inflation falling within that range. So it was a process to get there. And I think the Reserve Bank will make the same or take the same approach this time around, to give inflation time to get back to the 3% target, specifically given that we are expecting that at the moment over the medium term.
That medium term is going to be quite important, and if you're talking about interest rates and not coming down further, at least in the medium term, what's to be said about the current inflation levels as well as the cost of food for an ordinary South African? Is it affordable, or can we just simply call it as unaffordable in the rising cost of living?
So the reality is that if you look at overall inflation, that's actually quite manageable. And a lower inflation rate combined with, we definitely don't want to see a situation where we have high inflation with low growth. That is really not where we want to be. So getting that inflation closer to 3% is actually not a bad move over the longer term. However, if you look at the items in the basket, and that is the concern, if you look at cost of living for the average South African, it's food and it's transport. It's two of the items that the majority of South Africans really, we don't have a choice. You know, we have to spend money on those items, and they are becoming increasingly more expensive. And we've actually come from a period a couple of months ago or a year or two ago where we actually saw real pressure on food and fuel prices. So if we take that into account, it's a difficult time for the South African consumer, and nobody can deny that. And we will probably see that also reflected in the sectors where the consumer is the most active when we look at GDP forecasts going forward and the GDP numbers that we eventually see. And that, of course, is combined with high levels of unemployment as well. So not an easy place at the moment to be in from an economic perspective.
Absolutely. Thank you so much for your contribution. Chief Economist at PwC, Lullu Krugel, reacting to the latest consumer price inflation numbers out from StatsSA earlier today, indicating that CPI is up to 3.5% in the month of July.